To discuss this topic, please welcome Ilan Alon, Dean at the College of Management. He already spoke yesterday, so come on guys, let's give some energy to speakers. Ilan, please. Pedro Santos Vieira from 500 Global, partner. Come on, applause again. Okay. Jose Fernando Pereira, partner at Caerus VC. Applause. Okay, and Gvantsa Chkuaseli, early stage VC. Come on, guys. Applause. Energy. More energy. Okay. And moderating this discussion will be Carl Evans, Managing Associate at Gresham International. You also know him very well from yesterday. Right. Good job. Good luck.
Well, good afternoon, everybody. It's great to be back again. Today we're going to be looking at investment trends in blockchain, and we're on stage with some pretty awesome people and a pretty diverse group of investors. I was having a brief chat with them in the green room, although I don't think we call it a green room technically, do we? And it's really interesting, so I'm very, very excited about this panel. And I'm sure some of you will have questions, and we will try and do those at the end. I think it would be great if we work our way down the line. Perhaps you give us a good kind of 2-minute introduction on who you are, what you do, and what's brought you to Georgia.
Hello, I'm Gvantsa. I'm an early stage investor in Web3, and most recently I was at Outlier Ventures, which is one of the leading Web3 accelerators and early stage investors. I was heading a team on portfolio fundraising and tokenomic structuring, and I'm really delighted to be here with you all. I'm originally Georgian as well.
Fantastic.
Hello, everyone. It's an absolute pleasure to be here. My name is Jose Pereira. I'm a partner at Caerus, and we are an investment firm with a mission to create more of what matters most, and that's culture. So we invest at seed stage in sports, media, and entertainment, and we focus on enterprises that put creators and their communities at the heart of their business.
Thank you. Okay, so I'm Pedro. I am a partner at 500 Global. We have a fund that invests in pre-seed, seed stage companies in Central Asia, Caucasus, Eastern Europe, Baltics, and all the way down to the Greek Peninsula. So 25 countries with this fund. We do the investment coupled with an acceleration program. We run the program here in Tbilisi twice a year. We invest and accelerate in about 20-30 companies a year. Sector agnostic, pre-seed, $100,000 per company, some of them Web3 companies.
Yes, hi. Ilan Alon. I'm a professor and dean, College of Management in Rishon, Israel. I'm also an advisor on several crypto firms, and I'm also part of a VC fund, a $100 million fund that will focus on health technologies, but the innovation of this particular fund is in using digital assets as a way to raise money in addition to the traditional ways. So we have the same fund, but it's recruiting money in 2 different ways, the traditional way and digital assets.
Okay, fantastic. Thank you for that. Well, as we're talking about investment trends in blockchain, one of the things I noticed from all of you speaking earlier was that we have esports, an agnostic fund, and then a kind of tech-based fund as well. It'd be fantastic if you guys could give us some insights into what for you at the moment is some of the most exciting tech sets that you're participating in as a fund. What gets you excited? What ticks some boxes for you? We'll start this end and we'll work our way back down again.
Yeah, I think that's an interesting question. I'm good, thanks. That's an interesting question, and we are agnostic. We invest at pre-seed, seed stage, and mainly we've been looking for the past year or so on the infrastructure side of things, and also DeFi, looking at innovative DeFi products, for instance, liquid staking derivatives, risk-taking protocols, things like this. On the infrastructure side of things, our thesis is based on what are the technologies that will onboard the next 1 billion users into Web3. So we've been very much focused on scaling solutions, ZK rollups, interoperability solutions, dev tooling, also very much focused on decentralizing sequencer and validators. We have seen less activity happening for the past year on the metaverse and NFT side of things. And also, we see a lot of interest from consumer brands coming into Web3. And we've run programs in partnership with Farfetch as well as with Walmart, focusing on decentralized commerce, wallet management, sustainability, loyalty and rewards programs. So these things have been very interesting for the brands in the consumer space.
Fantastic. Sounds diverse without being too diverse, which is great. Jose?
So there's two ways to approach that question, because you have what are the trends right now, and then what is our long-term vision. When you're in venture capital, you invest with a time horizon of 6 to 8 years, which is when you get that liquidity event and you get to cash out. So I think on part one, which is what are we seeing right now, I like to approach it from a problem solution point of view. So I think that as you've seen, there's been lots of new blockchains that have come up. And the problem with that is that every time liquidity, users, and applications get more fragmented, meaning that there's a wall between each of them. So that's where we're seeing there's a need for interoperability, a connection between these. Particularly when you look at EVM blockchains, that's kind of easy in terms of interoperability. But when you see blockchains that have different models like UTXO, Litecoin, Bitcoin, that is a bit more difficult, and we haven't seen a solution for that. And the reason I mentioned Bitcoin is because you've seen Bitcoin ordinals. There is a game that's backed by Animoca, it's called Life Beyond, and it's the first game that's launching on Bitcoin. The problem is, how do you move liquidity back and forth from that? Then when we look at sports media entertainment, I like to see it in a matrix. So on one side, you want new business models, and on the other side, you want a new way to experience culture. So on the top right, which is the ideal place, you would want something that's new, a new way to consume tennis, football, music, etc., that has this business model that is beneficial for the creators, the athletes, the sports leagues, the brands. And then on the top left, you would have your Web2 applications that are integrating a token. So we are still investing into those, but I think our priority and the thing that I am excited the most about is this. So we look at it from a problem perspective. How do you engage the younger audiences? They're not watching as much sport as they did before, so they need new gamification, new interaction, and that's what we're focusing on.
Interesting. So you treat things almost like a Gartner technology chart. You're looking at the kind of from a perspective of, that's really interesting. It's very interesting insight. Let's keep it going.
Keep it going? Yes. Okay. I think this point of problem solution is a really important one, and so I'm going to say something very controversial, so you guys can come after me at the end of the session. I think like 80% of the projects that I see that claim to be a blockchain-based venture, they're basically a technology looking for a problem. I think that there's a lot of things that are happening that use the buzzwords of Web3 and blockchain that could be easily solvable without blockchain. And so from my perspective, I am always trying to understand what's the real problem that's being solved and how many users are out there that want it solved and are willing to pay to get it solved. And that's what turns then something that's technologically powerful into something that's commercially viable. And so that's always my perspective. And so far, if you look at the investments we've done, most of them are things that are user-facing and bring an experience that's actually seamless to the users, and they don't even need to know. if there's blockchain or if there's multiple chains or if there's interoperability, etc., etc. What really matters is, are you solving a problem in people's lives that's worth solving?
Jose, do you just want to say something?
I just wanted to add one more
please.
problem that I think it's quite important to bring up. I think that in order to bring institutions and big money to DeFi, you're going to need a compliance layer, and that's something that's missing. So you want to keep the privacy that we've been aiming for, but at the same time you need that verifiability. So CK rollups, I think, in my perspective, over-optimistic are something that is very important in the current market.
Yeah, you're playing on my lawyer strings there, aren't you? You're like, yeah, compliance has to be, absolutely. So, sorry, jump straight back in.
So I'd like to make reference to Pedro's comments about technology looking for a problem. I think that's true in every technology. I'm working now in the field of AI as well. And it seems that these AI people, they think every problem is an AI solution. And they set it up like that, and I guess it's quite natural. I'm a little bit of a different bird in this panel, in a sense that our fund was supposed to be a DAO, decentralized autonomous organization. The idea was to create another DAO, but not a DAO that is investing in the blockchain and crypto, but rather a DAO that is investing in traditional sectors. And our DAO was going to invest in seed and pre-seed money in healthcare technologies, a whole gamut of healthcare technologies that are available in Israel. Israel is a leading force in healthcare technology. And we started the discussion over this fund about 2 years ago. And we started to build the fund and the materials and the marketing and the legal and all the aspects associated with this fund. And then DAOs came out of fashion. They're no longer fashionable. People don't want to invest in DAOs. So then we were in a dilemma because we put a lot of effort and time to develop this vehicle for funding. So you can think about this as two aspects. One, a VC, a traditional VC that is investing in blockchain, which is, I think, most of the people on this panel. Then you can think about a DAO that is investing in crypto. And then you can think about a DAO that is investing in traditional investments, which is what we try to do, only to find out that the appetite for DAOs has decreased. So then we were in a very strange dilemma. Our partners, by the way, have experience managing hundreds of millions of venture capital funds in the past. So we decided to go the traditional way. That is to say that most of the institutional investors don't want to invest in digital assets. That's the truth. In fact, most of our institutional investors want to buy and hold for a very long time. They're not looking for liquidity. They're not looking to exit. They want to put it in, I don't know, in pension funds or in different kind of long-term investment funds. So what we decided to do, we decided, first of all, to change the name. So we're no longer, we're PIX DA, which is PIX Digital Assets, not PIX DAO, which we started out with. And what we said is really there's two markets of investors. You have the institutional market. They don't want to really hear about all these crypto innovations. In fact, it scares them. And in fact, they don't want to invest in it as soon as they hear digital assets. So the idea was to develop two funds that are really one fund. One fund will be sold to institutional investors through the traditional means of the family offices that are investing in these type of things. But the second fund is going to be a digital asset fund, and it will be sold through securitized in a digital asset format. And this would be mostly for retail consumers. And the innovation is that both funds will be managed by the same GP, and expenses will be allocated proportionately. And what the retail DA investment will do, it will give liquidity. In other words, by the way, we're going to launch it this year, right? But the liquidity allows you to then sell, which what most VCs, the biggest problem of VCs, they're not liquid. You have to stick around for 5, 10 years, and maybe you don't have any money at the end of it. So the idea is to provide liquidity. Now, this could create all sort of problems. For example, like GBTC, if you remember, GBTC value is less than the value of Bitcoin. So what will happen if the portfolio of funds that we have are selling in the free market less than the value of the companies inside? We don't know yet. The question is, should we keep some funds available to buybacks? We're looking at different solutions, but it's quite an interesting effort.
Very cool. Okay, so it sounds like, and one of the things I've noticed in this, and I've noticed through my work as well, is buzzwords. You see that a lot in the VC world and in the finance world. And I'm sure we've all seen those documents that feel a little bit more like an SEO application than anything else. Just how many times can I fit this word in this sentence? But having said that, blockchain specifically is a very evolving technology set. So what do you guys all do to stay on top of the technology trends? What's your methodology for making sure that you're up to date with the latest tech trends or the latest regulatory trends, and you make sure that you're kind of staying ahead of things? We'll start here again, and we'll work our way down.
I feel it's one of the most dynamic sectors that I worked in, and I have spent over a decade in traditional finance, in investment banking and in private equity, and I've covered before tech and digital media. I've been in blockchain space for the last 2.5 years, and I feel the industry changes at the speed of light. If you are not hourly checking Twitter probably, or the news outlets, you may miss big news. And every week something new is happening. So in terms of staying on top of industry, it's the crypto Twitter, I guess, that is first source of news, and then I subscribe to a lot of news outlets, everything from Bankless to CoinDesk, Cointelegraph, etc. Then internally we have a Slack channel where everybody posts something new and noteworthy. End of every week we had sort of market updates internally, giving each other presentation on what's happening in the public market as well as in private market. And I guess constantly having conversations with people, going to conferences, being on top of what's happening, and most importantly in this space, it's important to speak to builders and to understand what they're building, because that's where all the trends start. Also, being a Web3 accelerator, we receive huge volumes of applications per quarter, 2,500, and that gives us early window in understanding what applications are being built and where people's attentions are diverted. So yeah, that's how we form our ideas and insights on the market.
All right, it sounds good. As some of the guys I know in New York would say, you get your news from the street. So it's very interesting. Jose?
Thank you. So when you mention buzzwords and technology changing very quickly, you have two types of funds. You have the funds that are chasing those trends. And the problem with chasing those trends is that you have, like I said before, a liquidity horizon. So something that is trendy right now might not be trendy by the time that you get your tokens. Yeah. And you're going to be underwater in your investments. Examples of this, and one that we fell for, was in Move to Earn, Sweat, and that was huge in 2022 summer. Follow the trend, lasted like 3 months, tokens vested a year later. So I think that's a failed strategy, at least if you take into account the vesting period. The second type of fund is thesis driven, and that's what we are doing at Caerus, where the Sweat was in the fund I was previously. And again, we take that problem solution approach, and we are technology agnostic. So we look at AI, we look at blockchain, we look at augmented reality, and we don't really care about the underlying technology. We care about that solution, what's a new way to experience culture. And we've done our thesis, we've done our research. It's a 60-page document looking at each part of the value chain in culture and music, sports, entertainment, seeing what are the problems, what are the solutions. We take them as case studies, we see what has worked, what hasn't, and we have an idea of what we're looking for. So the way that we get the latest on the technology is directly from the founders. That's, I think, how we see it first, before the, let's say, it becomes trendy.
Awesome. Yeah, so you're trying to stay on top of it directly from the folks that
from the
approach you.
founders.
Yeah, very cool, very cool.
Yeah, I'm afraid I don't have anything very intelligent to say about this topic. I mean, we do get the word from the street. We do hear from the founders. And again, because we're focused on the final application and addressing a real need, I don't really need to understand a lot of what's happening in the foundational layer. I will go there if I need to do some technical analysis. I will talk to founders that I respect and understand if it's really needed and what's happening. Otherwise, yeah, I don't have enough time to study all the verticals that I invest in, so I always have to trust on the experts on my network to ask them for their opinion.
Okay.
So I want you to start by imagining a 2x2. I'm a professor, so I like to put things. I'm an MBA professor. Everything can be in a 2x2. And in this 2x2, you have two axes. One we'll call investment target, and one we'll call investment vehicle. And then I want you to think about crypto, no crypto, in both of these axes. So at the moment, we are crypto investment vehicle, but non-crypto investment target. So when you ask your question, it's a dual question. What trends are we actually talking about? So the one trend is obviously healthcare technologies, because it's non-crypto. We need an investment committee that has expertise in healthcare, doctors, researchers, hospitals, universities, etc. On the other hand, we have the investment vehicle, which is some of our expertise, internal expertise, and that we try to change with the times. That's how we change from DAO to digital assets, DA. And at the end of the day, it's about human capital. At the end of the day, it's, as you said, it's about the network. And who are the people that you surround yourself? Who are the people on the board? Who are the people, who are the GPs, and who are the people underneath them, the advisory board? And those are the people at the end of the day that give you the state of the art. Whether it's a lawyer who gives you the state of the art in the law and what's happening in the latest crypto regulation, or whether it's a medical researcher in a university hospital, or maybe it's even in a hospital where they even allow us to try out some of these inventions. For example, these type of partnerships, for example, in the healthcare technology. I'll give you an example. There is this company that you could take your cell phone and take a picture of yourself, for a video of yourself for about like a minute, and it could diagnose a whole bunch of diseases. It's incredible. It's really scary, actually, because then you go to your doctor and you tell them, look, this is what my phone told me I have, and they can do the checks, and actually it works. But it needs to be tested, right? It needs to be in the hospital setting, and doctors need to actually try it out. So partnerships, network, and in different fields.
Very cool. By the way, because he's a professor, there will be a test at the end of this, so I hope you're all taking notes. Let's switch lanes slightly. We're in Georgia, which is a fantastic innovation hub. And one of the things I always find very fascinating is understanding a little bit about the geography of it all, the geographical premise of where you like to make investments. Positioning investments carries a level of risk, and the reality is that sometimes geography plays into that risk factor. So for you guys as investors, what do you, or where do you like to position investments geographically? Where are your hotspots? Where are your no-go zones? Where are your favorite places? And we're going to start with the professor and work our way this end.
So actually, in my field, I'm an international business developer, so I actually I work with this issue quite a lot. And in Israel in particular, the companies, the founders are sometimes in Israel. The investment vehicle is in the British Virgin Islands, or maybe in Dubai, some low-tax zone. The investors might be Americans. So, I mean, it's truly born global, and for the most part, digital. So at the end of the day, what are we actually talking about? Are we talking about the domicile of the corporate structure? Because that could be just any place with low taxation, right? Are we talking about the access to human capital? Well, that has to be certain countries. Are we talking about some cost advantages, operational cost advantages? Or are we talking about a regulatory arbitrage, which I think many people, and Georgia is a case in point. Oh yeah, we have laws, but you could do anything, right? So the idea is that there's a double-edged sword here. You go to a regulatory arbitrage situation, then you kind of, you get a brand image of a shaky player, right? So it's always very difficult to think about how to position the geographical location of your company. Mm-hmm. And in today's world, we could really be just about anywhere and change the different components of the corporate entity depending on the needs.
Sure, and that's really insightful. Seriously, because as a non-VC, I instinctively think founders, start block, here's the business card, here's where we are. But you're taking it outside of that box and you're going, no, let's look at the whole spectrum, let's look at the picture, which is genuinely really insightful. So thank you for that. Yeah.
Let me just put a plug in for Georgia. I think Georgia, the IT sector is growing around 20% a year, and human capital is about half the price of what it is, maybe even more than half the price. Taking quality into consideration, this would be a fantastic place to do development, for example.
Awesome.
Yeah, I mean, we tend to invest a lot in emerging markets at 500 Global. So this is the most recent fund and an accelerator in one of these regions. So we do follow talent more than the market opportunity itself, though often these markets are big themselves alone. But we do follow talent, and we do like to invest in technical talents that we know can build robust tech that will solve big global problems. And then the commercial side of them, that's usually where we come in with our accelerator, with our training programs, because we fill in those commercial gaps that the teams can have. So again, Georgia is a very good example. The wide region, the broad region here is a good example of deep tech talent that is solving really big problems. And they're as good, if not better, than a lot of the tech talent that you'll find in other tech hubs, Silicon Valley, London, Berlin, etc. And so we're happy to be doing some work here and help them go from here to the global markets.
I think there's a flywheel that happens and deal flow moves. First, we're global. We look at deals globally. But if you think about the Silicon Valley example, you have founders that come up in a certain region. And then because founders are here, you have investors that come here. And because other founders from other places in the world know that investors came, then more founders come, and then more investors come. So I think that that's how capital moves in terms of finding the founders. So we are focused on those, let's call them innovation capitals of the world. We invest in US, in Europe. This flywheel that I just talked about is happening a lot in Dubai and in Singapore as well. So wherever the capital is, founders are moving and more funds are coming. And that tied with the regulatory advantages that each of these jurisdictions give.
Yeah.
Looking at Outlier Ventures, we didn't have any geographic restrictions, so we were investing globally. But looking at the portfolio, there were clear concentrations. Most of our portfolio was US-based or Europe-based, with few of the companies we had in Asia as well as in Australia. But I think the good thing is that nowadays there is no really geographic restriction, I would say. Teams are remote, decentralized, and investment can go in any country or region.
Yeah, very cool. Very cool. Okay, so we've got 10 minutes left, give or take some change. I know there are a lot of innovators in the audience, and speaking with people here the last 2 days, there are a lot of founders. If you were to give them any advice as folks that work in the investment sector, you mentioned yourself, we'll start this end and work our way down, that you see 2,500 a quarter prospectuses that come in, whatever shape or form. What makes something stand out for you? And I don't mean the buzzwords or the tech set or anything we've covered off. I mean, think more native, 30,000 feet. What is it that, oh, I actually really like this. What keeps you reading something rather than just putting it on top of the discard pile?
I think there are three things that when I look at the deck, this is what I'm looking for. And then if those three things measure up, then I go deeper, try to understand better. And those three things are the team, the product, and the traction. And because we invest so early stage, it's really the highest factor there is the team. And on the team front, we really need to see that there is unique insight in solving the problem. Whether that comes from the domain expertise, from the previous track record of being a founder, it doesn't matter where it comes from, but it's really crucial to understand that this team has really unique earned insight in solving this problem. Because the product can change, things can pivot, but is this the team that can execute it, which is the biggest.
Very cool. So you're looking at the team, you're looking at the folks that are building it and driving it forward. Fantastic. Jose?
I don't want to repeat what you said. It's going to sound cliche, but it's the passion that you can feel from the founder. There's this one example of a founder I met. He's based in the US, and he was explaining the problem that he had with his kid, and he couldn't sit his kid through a tennis game, and he was a diehard fan of tennis. So he started building this product that overlays on the match, so it enables you to bet for each of the points with zero latency. So he had this childlike passion for the project, for what he was building, that hooked me immediately. And then when you go through the pitch, I think there's an element of storytelling that has to be compelling. Then you have the financials. The more they can build and bootstrap and postpone that race, the better chances they're going to get right now. And adding up to the passion part, I think that the more bold and the more they focus on differentiation, it's what makes it stand out. Because if you look at so many, let's say, decentralized social media, you have, I was doing the research, there was 26 decentralized Twitters that had came up in this year. When you look at brand loyalty, there's an enormous amount of projects there. So I think at the end, it's going to be who's the founder that can go through this bear market, that can raise the money, of course, and just endure.
Sure.
Yeah.
Yeah. So it sounds cliche, but people buying people. Like, do you
at
believe
the end,
in
it's
this
the
person?
team. Yeah, you're investing in a team.
Yeah, absolutely. Keep it.
Yeah. Without repeating everything again, I would actually say something. I mean, about the passion. I think it's very hard to assess true passion, to be honest. Just to be a little bit contrarian. And I think that when you invest in things that are deep tech, just don't feel offended, I'm a geek myself, but a lot of the founders that come to this space are geeks, are nerds, and assessing the passion is really hard. Because the reactions, the emotions sometimes are bottled, and everything is in the lines of code. So what I try to discern is, what have they done in their past lives, or, metaphorically, that equips them to solve this problem. This is what Gvantsa was saying, is what's the unique insights that this team brings to the market, whether from past training, whether from past work experience, whether from the networks that they have access to, that will make them the winning team at solving that problem. The product, to be honest, for me, it's so early when we invest, doesn't really matter much. I know it's going to change significantly over the course of the next 6 to 12 months. So I really want to understand, is there the big market opportunity that we all of us VCs want to see? And is that the team that's going to capture that opportunity? and everything else we know it's going to come together in the near future. Oh, if I may add, there was a question earlier that was a little bit about trends and how do we get educated and whatnot. And one thing I didn't add, because I thought we were going to come back to that theme of the verticals that we get more excited about. Not that many people know, I think, about my background, but I'm a sustainability guy. So I was trained as an environmental engineer. And one of the things that I would like to see, because everyone comes after blockchain and crypto because of the environmental burden that comes with it, I would like to see blockchain solutions, Web3, whatever you want to call it, address true sustainability problems in a way that's unique and really leverages the power of blockchain to help us build a better planet.
So I'm not going to repeat everything that was said, but I totally agree with it, and I maybe want to add a couple of additional points. First of all, each person sees, when they look at an investment deck, they look at different things. Pedro just said that he's from ESG, environmental, and so on, so that would be naturally where he's going to gravitate when he looks at a project. And if you're a lawyer, you're probably going to gravitate toward the legal issues. And if you're a marketing person, you might want to look at the marketing aspects, right? So this is the importance of the investment committee. The investment committee should be diversified, experts in their respective fields, and provide a holistic view that can judge the investment potential. So that's number one. Number two, at the end of the day, all the investment decks that are decent, they look good. They really do. Some people really know how to make good investment decks. Maybe there's some PPT frames somewhere that you could pick up and fill out the outline. But what I found is when you talk to the entrepreneurs, they're always very passionate, very excited. They're thinking they're solving the world's problems, and they're like the new Jesus, right? Reincarnation. But what I found is really helpful is when you have a discussion with them and you start asking them penetrating questions. And then within a very short period of time, you see how much depth they have. And a lot of times they don't. The depth, they reach a point where, we need to ask somebody, we need to. And then you see, okay, they don't really know their business. They don't really know their competition. They don't really know their competitive advantage. They don't really understand consumer behavior the way that I wanted them to understand it. So what impresses me is when I talk to entrepreneurs and they got the right answer to all the difficult questions, and they have depth, and they have experience, and they've done this before, and this gives me confidence that this would be a good investment potential.
If I may add, because I think that the passion part was a bit taken out of out of context. It doesn't mean, okay, you're passionate, here's the check, go and explore your passion. It doesn't work like that. But we have a scoring framework that we have developed. And this was really how I got into crypto. I was sharing research on Reddit, on Discord, and what was missing is that people were looking at crypto investments the same way that you would look at finance, and you will look at future cash flows, etc. And there is no way that you can apply a traditional finance valuation method on crypto. So we have a scoring framework. We look at the team, we do diligence, we look at the legal. Passion is just one of the things that stand out and that hook you, because we get hundreds of decks every day. We are introduced to founders, and that energy sells the first gate of our diligence, and then we look at the market, we look at their background and everything. But I think that when you meet a founder one-to-one, that really makes a difference.
So by the way, Jose, I totally agree with this issue of passion. And I want to say one more thing. So there's several layers, okay? First it's passion, then can you answer the Q&A, and then you start working with them. And then you realize that there's a difference between the sales pitch and the person's ability to actually execute strategy. And you see that within the first year. And sometimes, you need to cut the losses early.
All right. Well, I hope everybody has found this exceedingly insightful. I know I have. This has been fantastic. Join me, massive round of applause in thanking these guys for taking time out their busy schedules for being here, and enjoy the rest of the day.
Thank you very much.